Very good. So our next session, the changing landscape of fintech across Europe. I have the pleasure of a very strong and interesting group of people, mixture of fintechs and banks, well, one bank at least. And maybe we'll do a very quick round of introduction before diving into the topic. So we've got Ollie here. Maybe you want to start?
Hello. Hi guys, I'm Ollie, Purdue, the CEO and co-founder of Loot. Loot is a new banking service in the UK focused on UK students. And the way we work is we use transaction data and a better UI, I guess, to help students make the most out of their money. So we give them a Visa contactless prepaid card. The transactions they make on that get logged, and we can show them where their spending's going, show them how to improve, and then help them by lowering their spending through discounts and offers.
What Ollie didn't say is he just turned 22. So here's the next generation of fintech founders in Europe.
Hi, my name is Gabriž. I've been working in fintech mostly all my life, originally from First Data in payments. Then I moved to Anthemis, which is a fintech investor with quite interesting investments across the globe. And most recently, I have co-founded a fintech incubator and a fintech innovation studio working with banks and helping them to bring new products and services out on the market.
Well, good afternoon. I'm Cyril, co-founder and CEO of LYDIA. LYDIA is the French mobile payment solution that specifically works very well with the millennials, so people between 18 and 30 years old. We're focusing mainly on places where cash and checks are the dominant payment methods, not really on retail, and that has been helping us to grow our customer base to 200,000 people now, a little more than 1,500 new people joining every month. So it's pretty happening. So yes, mobile payment can work even in developed countries.
Hi, my name is Deger. I'm one of the founders of payworks. At payworks, we make it easy for developers to integrate card payments into their applications. Our clients are companies that build the next generation point of sale systems, companies that focus on the restaurant vertical, on the taxi vertical, into stadiums, and they are building point of sale systems that really solve a merchant problem, and we help them to get the payment piece out of the way and help them to process transactions internationally. We're a Munich-based company. We have clients in 14 different countries in Europe, plus South Africa, and yeah, looking forward to the panel.
Hi, good afternoon, everyone. My name is Tomas Peeters. I'm head of strategy for the ING-DiBa. ING-DiBa is in Germany probably known. It's the third largest retail bank with over 8 million clients. Yeah, and the main thing, I'm so the only banker standing around here, but I feel well. They treated me absolutely nice till now, so it's very good. I think it's great to be here on the panel with, as we are a purely direct bank, so we don't have any branches. So we are always looking to find the ideal solution for a digital experience for clients. That means from the first moment until any transaction he wants to do. And we do believe that fintechs are absolutely key also to move the borders and to open up and see opportunities where we bankers might not see it.
Great, thanks a lot, gentlemen. I mean, I would give a little bit of context. We had slides prepared, but we jointly decided to just throw them away and just give a bit of context and then dive straight into the discussion. It's a bit difficult because I'm not sure how plugged in the audience is into this fintech world, into the startup scene, into the VC scene. How many are sort of more traditional bankers here? So bear with me. Some of you might know these things, but it's pretty obvious that fintech has become a real factor. There's been $12 billion invested in fintech globally last year. This year will be a lot more, actually. There are a number of unicorns. You have all heard about this. Companies valued higher than $1 billion, also in the fintech space, not just in the US, but also in Europe. You've obviously heard of Funding Circle. You've heard of Klarna. You've heard of TransferWise. these companies not only have a high valuation, they've actually really proven to be extremely useful services, either services that haven't existed at all, or services that are a factor 10 or more faster or cheaper or more convenient, and that's pretty much why people use them. In Germany, I guess the movement took a little bit longer as usual, US, UK, and I think this year we've seen some very large developments also in Germany. Smava, we just spoke about more than a 10 million euro capital raise from our colleagues from Early Bird and others. We've seen Ox Money, we've seen Number 26, Savedo, Knip, Creditech, all did extremely large raisings at very high valuations. We've seen this only in the US and UK so far. So I guess the US VC has discovered Germany and Europe for good, which is great news, I guess. And for those of you who still don't believe Fintech will have a lasting mark on the banking world, think about companies of the first generation, 99-2000, which unfortunately I was also part of, that are now very established, very profitable and highly valued companies. Think about Interhyp, which now runs a third, I guess, of the German mortgage market, at least origination, which obviously ING-DiBa picked up in 2007. Think of a Wirecard, which comes from that first generation, 99-2000, which now has a market cap of between 5 and 6 billion and is rapidly expanding into Asia. These are just few examples. So many of these guys who might now just be starting in one country, some of them will become real factors in the banking sector going forward. Last piece of information today, I mean, some of you might have seen the Square IPO, which was a very big disappointment at a valuation of below 3 billion. That's at least what it's priced at. We'll see how the IPO ultimately goes. But it's interesting for us as VCs, of course, because the last private round was valued at 6 billion, so double that size. So my question to my colleagues is the bubble going to burst? Did we have a bubble and the air is coming out of it, and what can it mean? Or is it just a singular event that is not relevant? Anyone volunteering?
Well, I don't think that will be a singular event. What's happening with Square is basically what happened previously with Groupon and other companies like that. It's not specific to the fintech per se. What's happening is that you find companies that are doing very interesting thing and innovative thing, and they got well funded in Series A, B, C, and then in later series like D, E, F, you start to see people that are very different type of investors. They're not VC, they're not running the same mentality. You see banks, you see pension funds, and what these people are doing, they just want to be part of the hype, and being part of the hype means you're going to pay expensive money. That's what Louis Vuitton has been running on for years. They're selling plastic bag for 1,000 euros. That's exactly what's happened with Square and with Groupon and some other hip companies. Large pension fund, Fidelity to name just one, has been throwing billions to these companies at huge valuation. At the end of the day, when it comes to the real market and to the real people, and for that, the market is pretty efficient, well, there's a reality check, and could be some big disappointment. The truth is that for these people, they're going to get reallocation of new shares to compensate the loss. So they won't lose a lot. But honestly, yes, the big bubble are going to burst, not only in fintech. Still, it doesn't mean that fintech's not going to be big and not going to change the banking world and the way people use their money.
Cyril, did you actually say that Louis Vuitton sells plastic bags?
They actually sell plastic bags.
Okay, just want to be sure. I thought it was, yeah, okay.
I'm not sure I agree completely. I think there will be companies, and the fact is that there is a new money coming from pension funds, from crowdsourcing and so on. But also these investors will get more educated and will become better, which is great news for fintech, because fintech is only starting. So fintech, it's probably 2 or 3 companies which IPO'd, while the tech overall is probably in a big bubble. Fintech is really taking a part of it, but it's a huge opportunity ahead of us because there are so many services which have not been touched by fintech startups in the financial services, and that will be coming. So I think I partially agree that some companies will be hurt not because they are from fintech, but because there is a bubble overall in tech. But fintech investors, or generally investors who are now coming from corporate world, a lot of banks are now establishing new venture funds. So you may know First Data just established a venture fund, and a lot of banking groups are only now starting to build the venture fund arms. So all of these people will get educated, and I think we'll see a slow down in the valuations in A, B, C rounds, and it will not be so big eventually. And I hope it will really get back to the basics, meaning revenues, P&L, and we will get more realistic valuations eventually.
Maybe one point to that, I think a very important difference to 2000, and especially looking at fintech startups that have very high valuations, is that most of the companies, they have a real product that the consumers want, and that they have proven that the consumers want that. And I think what's dangerous is that those later stage valuations are really high, and so the expectations from like more later stage investors are relatively high. And if you look at Square, it's not the later stage investor that take the hit, it's the early investors. So the dangerous valuations are the early valuations that are maybe too high, and then at a later stage, I think you can back that with kind of the proof that you have from the product, and that's something that's important also for us in the market we are in. So we all need to build a product that the consumer or our merchants or whoever we are targeting really wants in order to build that traction and to achieve those valuations, I guess.
I do agree that there some valuations are quite high, so I think that's absolutely true. I don't see a bubble for 2 simple reasons. One is there's so much funding going around. I mean, people do not know where to invest their money. So big funds, pension funds, insurers.
Smava is one.
Yes, that's an alternative, of course. So I think that means, and given the low interest landscape that we will see coming for the coming few years, this is not going to change. So money will keep on flowing because people want to invest and get a return, and also partially in a high risk sector. So I think there we don't see it. As banks, was a study by I think Accenture that 7% of the investments are only done by banks. So it's not that we as bankers are the ones that are big in there, I think. But so some valuations are probably high. I agree, there's a product. So that's the difference with the past. But we are in venture capital space, and that means in the end you have 10 investments, and that's a calculation that good venture capitalists make, is that you make 10 investments and you expect 3 to survive long term, of which 1 will be very big. So that's a calculation. So certainly if we see how many payment providers there are in this space, this can only go together and merge, and of course there will one big player will win, or 2, 3, and then all the rest will of course be absorbed or stop doing business. But that's the normal cycle of doing VC. So I don't think it's a bubble. Of course, people always see a hype in certain things, but it's with the low interest rates, investments will keep on coming.
So I guess also I believe we are in the middle of a, let's say, mild correction, which might not be a bad thing. We are a 100 million early stage tech fund, so we actually like valuations to come down a little bit. And what I do see in the market is that, I mean, here in Europe, I think we've been fairly disciplined. Let's say outside of the UK, we've been fairly disciplined in always asking, so what's your business model? And we're really we still ask that a lot, and we think about the business, how are you going to monetize this? I think in the US, to some extent, the VCs have moved from looking at EBIT and to revenue or gross margin, and now they're sort of looking at only user growth or bookings and more operational metrics like this. So I think we're seeing a little bit rediscovering a discussion, like what is your business model, how are you actually going to make money? Is that going to be an opportunity for banks to finally start doing more acquisitions? I mean, ING has recently made an acquisition, I understand. How do you see that? Will there be more M&A from banks in fintech?
There are some banks with good VC units themselves, so they invest. We have several big banks in Germany and also internationally doing that. Of course, ING bought, we bought Customer, which would be comparable in Belgium with Payback here, so something 1-2 months ago. I think the risk is, I mean, we of course cooperate with Interhub, and we see that. I mean, the main thing is these small little companies, they are very fast. The risk is if you buy them, that they just are killed by all our procedures in banks, which we of course have and have to have. So I think we can do better for a fintech just to make sure we give them clients, leads, so that they can do business, that they can grow, and just grow both together on that level. I think that's better than just, they don't have any problem to find funding, so that's not the part. And I think the worst thing as a bank that you can do is integrate them in a way, because then it's all gone. And the other part is, what's the edge of a fintech? If you would enter with 30%, how would other banks, potential clients, react on that? I'm not sure, but that's a rather question to you.
But if I can answer the question, do you believe that the banks are going to start buying fintech companies? You know,
some do. So we already did. I mean, you've seen a Simple, of course, is the most famous example. I expect that several other ones are. I mean, we see other ones being invested, and I'm sure that some companies will be bought. But will it be a lot? I think first is cooperation. See that there's a lot of traction. So the first thing we have to give to fintechs is, I think, clients, leads in a way that they can start growing their business. We see that. We work together with Genie, for example. When you develop their business, if you give them material to work with, you can read the money transfer form. It can read it out, or just an invoice that you have to pay. It reads it, and then it just gets automatically paid, because nobody ever needs an IBAN in his life. I hope that one day nobody needs it anymore. So that's what what I will see, and there, so you see that these companies just start flourishing because you give them business. And then I think if we are very intertwined, we've seen in France also some example, might be wise to buy it as a security, that nobody else takes it from you. Currently, in the market where we operate, I don't see that risk.
So maybe we'll change the topic here. I mean, obviously, there's a lot of this thing going on, fintechs versus banks. The reality, certainly in payments and in banking, is that practically all fintechs cooperate in some form or fashion with a bank. They have to. It's a regulated business. So many of you are also collaborating. It would be interesting to get your views on your experience with that collaboration. I mean, some of you work with banks to get the license, basically. Others have banks as clients. Or bank-type institution like you, Christian. And of course, you're on the other side and you also cooperate with banks without necessarily buying them. So what's your experience? Ollie, you want to start?
Yeah. So we've launched Loot on a prepaid card infrastructure that we had to partner with somebody that's regulated to do. We're looking to do that with a bank in the UK. But in between the last 2 meetings we had with that big bank, we built the whole infrastructure and launched it. So I guess for us as a tech company, speed is a big thing. Banks are very open to collaboration, but we can do so much in between 2 meetings with a bank that when we go back to them, the whole scope of the conversation's completely changed. We're no longer saying we're a pre-launch startup with no users. We've now got users, we've launched our own product, and we've built a bit of a buzz around ourselves on our own. So I guess with banks, there's definitely open to collaboration. Our business model depends on collaboration, both in the UK and abroad, but it's working at a pace that works for both companies. And I think when tech gets better in banks and APIs get released and things like that, it will be a much more open collaboration where tech companies can kind of decide the pace themselves.
But it's almost hard to believe that you were able to it only took 99 days for you to design the product and then launch it together with the bank, because it means the bank was able to support that speed, which is hard to believe. Yeah.
Yeah, so
unfortunately, you can't disclose what bank this is yet, but we're very curious.
Yeah, we used a prepaid card company before, so they were able to keep up with a big bank that we're going to. It will be slower, definitely. But yeah, 99 days from the first day me and one developer in the office to out in the App Store, launched with working debit cards, everything on the app, and then we're a team of 7 then. So yeah, it's quite good.
Cyril?
Well, I guess, fintechs are part of the financial service system, so they are regulated exactly the same way banks are regulated, and that means you have to work together. It's not like some people are on a planet, the other one are on another planet. We serve the same customers, we are regulated by the same bodies, and basically there is no way fintech and banks won't cooperate. The problem is really a question of speed, a question of interface, and a question of culture, I should say. There is a huge culture in all the banks we've had meeting with, although we do work with multiple banks as a supplier and partners, which is the not invented here culture. It's every time you go and talk to the people, even the innovation people at bank, what they tell you that, wow, what you've been doing is pretty cool, you have pretty good traction, customer like what you're doing, but honestly, what could prevent us from doing it? We got all the capability of doing it. The truth is, of course, a bank has the capability to issue a mobile payment system. The question is, why haven't you done it for the last 10 years, 12 years? Well, more than likely because the procedures, because the core banking system, because whatever rigidity you have within the bank doesn't help you do it. And at the end of the day, what you're building is a product that's good for the bank. And what we're building is a product that's good for the customer, for the people that solve a problem. And at the end of the day, the banks will have to take care of their customers because otherwise they'll go elsewhere. And yes, banks have been doing in the past, they'll buy fintech. They already bought most of the online brokers in the past, so they buy fintech, for sure. However, it's not an easy collaboration. Time is a problem, culture is a problem, and even perspective is a problem, but that will solve.
I think it's absolutely spot on. I don't think it's so defensive, but it might be in some houses. I don't know. It's myself, and we're also in the BDB are really cooperating, and so I don't see a big defensive mechanism. But the reason why it is so difficult stands behind you. It says co-founder, 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 partner, and then CSO. So it means you're just entrepreneurs, and banks cannot be entrepreneurs. So I think that's the big difference, and it starts with the standard procedure of buying something, a service, buying a service, is this company, please give you your last 3 years records that we can look into them. If you exist 99 days, that will be difficult. So it starts there, and then it goes over legal. Nothing is done without lawyers, and you don't have any lawyers. So it's just a huge cultural thing. And I think we all struggle with the way, and in a positive sense, how can we speed that up? How can we, because of course banks were torn up for regulation over years and still are. So we have 2 big struggles, regulation and digitalization on the other side. How to mix them both, and then mix that with entrepreneurship. It's a nice one, but banks will never be the entrepreneurs. So it will be always you guys.
Maybe I can share my experience a little, because so I feel like 50% of the time my team is trying to translate between the innovators and the banks. Because what payworks does, basically we are an infrastructure layer between the innovators at the point of sale and the acquiring credit card acquirers / banks. Because if you want to sell a payment service, what our clients do, if you want to sell a payment service in South Africa, you need a South African bank to accept the payment. And so we kind of provide the technical link, but also we provide the business link, meaning that we are talking to the banks and we're trying to explain them what they need to do in order to work with those innovators. And so my conversations with banks have changed over the last 3 years. When I went into a meeting with the banks like 3 years ago, it was more like, we do everything ourselves, we don't need those startups, so you can come talk at our conferences, but we maybe listen and then we implement it ourselves. And that has changed, and I'm really happy to see that, that banks are actually trying, and there are probably good and bad examples, banks are trying to become better partners for those companies who innovate. And that would also be a question to you, if you acquire a company, what does that mean? Yeah? Because what I see, and especially in our point of sale space, there are so many innovations happening. So if you buy one company, you have to buy the next one, the next one, the next one. And what I always recommend to our partners, to our banking partners, if you can become the best partner for those innovators, it's probably much better than trying to do everything by yourself. So rather focus on becoming the best partner for those guys who are innovative, because if you have two guys who are building an app, they will always outperform you, because they can really focus on the merchant or the consumer, on what the consumer really wants.
Yeah, to follow on from that point, working with fintechs is probably a priority for banks because we're a really cheap way of being innovative, if you think about it. We launched our product in 99 days, and when we work with a bank, what we will charge them to launch with them is going to be nothing compared to the cost they would have to go through just to build something similar. And then they've got so much more time, there'll be another fintech company out. So I would see it as a way that banks can save money but also stay innovative with their huge size.
Maybe I can add to that because I work with banks as an innovation studio and trying and helping them to innovate. And there's this cultural angle. So you have the digital guys in the bank. Sometimes it's even CEO. That's the best case, when the CEO is someone who understands digital and user experience. But then you have a very different group, which is the people who own the digital, the innovation people who understand fintech, who understand startups, who know how to set up the collaboration, what we're just talking about. That is great, but then you get a very different cultural clash with head of retail or head of corporate who actually lives his own KPIs, and he doesn't want to get distracted by this little thing out there, which is not going to help him short term. So I think what we need to understand that there needs to be a cultural shift on the banking side, that digital is not only a channel, but digital is way of life. And consumer, it's all about user experience. If the banks don't understand that the generation which is coming is all about user experience, it's going to be a really tough time for the banks. So as long as the CEOs, the head of retail, really listen carefully to the head of strategy or head of innovation, let's collaborate with these little guys. Let's try, experiment, do MVPs, and try to bring more value to the consumers. Then it will be, once there will be very different user experience for their customers. And that's all what matters.
Well, and the other aspect is, of course, customer acquisition cost. I mean, usability, I would agree, but customer acquisition cost, and that's a little bit my surprise. I would have expected a lot more exits to banks. Why? Because many of them have lost touch to that generation that is just expecting a certain level of usability. But the customer acquisition cost, I would say on average, is probably 1/10, if not less, than what banks are willing to pay today to get a new account opened or a new card, or a new loan. So in many ways, you could think of you are actually buying a channel to the consumer that is extremely efficient, with the risk, of course, of destroying that startup with your corporate policy. Do you want to jump in?
I think it's about a new sourcing model. So because you have fantastic functionality built by startups, mostly kind of small pieces of a bank value chain. I think we're quite used to work with the big IT companies as banks when we have them all, I think, in-house. And now the question is, okay, how can we leverage, cut it in smaller teams, the agile way, and then make probably part of the sourcing will go to still the big ones, and other parts should be handed over to smart startups. Yeah. So, and I think we all have to make that shift, and it's not an easy one because you have to reorganize a lot of stuff. The agile ways. One thing is to keep it as long as it stays a project method or a way of the starting and quickly get things done, it won't function because you need a full company bank to turn, and then indeed not anymore steer a tanker, but steer a lot of speedboats, and a few will be startups. That's a bit how we see it. On the acquisition costs, I think if there's new channels, we see certainly in Germany platforms. I mean, we use them. I think you have to cooperate. It's absolutely a great way to get clients in, and I think we can't compete on their prices with Google, because if we go, for example, give a consumer loan to a client, we give that to X%, let's say 50%. But if you're a platform, you probably can pay the double because you can kind of give to 100% almost a consumer loan. Therefore, the value for the client is just higher. So you can't outperform them, so you have to join them. Absolutely.
Yeah, I'd like to change a bit into internationalization. I mean, this is a very international crowd. And it's interesting that if you look at fintechs today, most of them have started in one country. You have to start somewhere. But there are not so many examples still of fintechs that have succeeded in being dominating 2 out of the 3 big markets, UK, France, and Germany, which is actually interesting. No? I mean, there's so much funding going on. These teams are so great, and still it is a big challenge for them to move from Germany to UK, from UK to Germany, etc. I was going back on ING. I'm a huge fan of the bank because you actually have shown that you can organically grow across Europe. Of course, we're talking about 12, 13 years of development, but you made it very successfully. How did you do it? How does it work, and can these guys learn from you to expand organically and internationally? Yeah?
It took us over 6 months to build a country, so not 99 days.
Build a country.
To set up a bank in a country, so indeed, so an ING Direct. It started in 99, so indeed in the first bubble, and it survived. But every market is different, so you just have kind of a bank out of the box. But that's what all other banks also offer. We see that a lot of fintechs work with banks behind, so it's kind of bank in a box that they use. And I think then we put a good local team in place because banking is still something local, interesting enough, because payments is kind of standard to our feeling. But all client contact, communication is absolutely something local. I worked for 4 years in Italy in ING Direct. It's completely different mindset. Also, a savings product is something different there than here. The view on prepaid cards is different there than here, also in UK. So the rate sensibility is different. So I think internationalization is not easy. With Inter, we're still only in Germany. So I think the main thing is always first get big here before you start losing focus on other countries. I mean, I always, of course, we talk to loads of fintechs. We always hear next year we go abroad. Guys, get big first in your country, then go abroad. I mean, you better are in one country big than in a lot of countries small. So I must say, honestly, if I get the story, I always think, okay, shouldn't do, rather more focus. But of course, I think you build a basket and then you try to bring it somewhere else. But you need local people. I think that's the key flavor.
What if you are from small country?
I'm Belgian. which is, by the way, number 1 in the football. You know that? Yeah.
So the reason I'm saying is that
we're in Germany.
Yeah.
Okay, sorry.
Yeah. Okay. Yeah.
The reason I'm saying this is countries like Sweden or Estonia, which you might well know are startup capital or one of the most important countries, very small countries. And the way you do this is that you start small, you think big, and you validate really quick and dirty in your home market. You immediately move to some big market and then you make it big. And just to add on, because doing this from a small market, it doesn't mean that you cannot create great companies. And companies like Klarna is a good example.
And of course, I think here's probably the story is different for each vertical. It's different B2C, B2B. Obviously, Christian has a hardcore B2B, more sort of infrastructure tech play that you can much more easily scale across Europe. And you were present, I think, in practically all of Europe now and South Africa. So is that easier than B2C, you think?
In terms of
Getting
scaling it into different
presence?
countries, yes, certainly.
But your sales cycle selling to a bank or an acquirer must also be quite long.
We're not only selling, excuse me, not only selling to acquirers, but sales cycles to acquirers are extremely long. And we can certainly not rely on that as an only source. So we are serving the innovators, and they are usually relatively quick. So I think in terms of bringing payworks international, there was never a question not to do it. So we we did our first slide deck in English and presented it to an Austrian company, and then figured that it might have been in German, might have been a little bit better, but we didn't even think about not going international. And I think that's the nature of many companies that are starting up, because you see all those success stories of companies that are really going international really, really fast. So that was one advantage. And then, of course, our clients are like that as well. So we have to go international in order to serve our clients better, and that really helped us to expand that fast.
Maybe just to a point, I mean, at this point, we disclose that our fund is an investor in payworks, to make that clear. But I personally think, actually, if you look at your case, there was a very interesting moment. We had a American guy who came about half a year ago. He's a senior business development expert in payments in US and UK primarily, and he loved that company so much. I mean, these are these guys from Munich, LMU, really good techies in their 20s. And you combine it with that guy, he loved the company so much, he invested also privately, and basically has now a card. And he goes to the US and UK and he opens up all these accounts. And it's actually a very nice example. You can call it localization, or you can call it matching of skills. That has worked really beautifully for your company. It's probably different in your situations, but maybe there's something we can learn. When are you going to go outside of France, Cyril, and how are you going to do it?
Because I don't want to have my friend here lying, we'll go outside France next year.
Okay.
The truth is that finance is by default international, and we're looking at millennials that were first core users, and students, they come from all countries, they do the Erasmus program, they move from one country to another. One day they live here, the next year they will live somewhere else, they study here and move to another place. Everybody is actually international in their way of living, and there's no way you're going to build a service that is purely local. Yes, it's a question of how much money, how much resources you can put at once to open especially a B2C market and multiple B2C market. That's why we've been doing in one market, and then we're going to open new market next year. But it's not a question whether we're going to do it or not. If we can't do it, it's because we have failed and then we'll be out of business. There won't be a French mobile payment company for millennials. It's not a business model that exists. So it has to be at least European. And the good news is regulation is helping it. We got a pan-European regulation, and the regulator is pushing that direction, so that's pretty good news for the fintech startup. The other good news is, of course, the euro, which help a lot. You don't have this currency issue. Of course, well, we're going to do UK, so we'll have that currency issue, but still, I mean, it's a market that has to be seen as once, although there are local mentalities and culture that could differ from one country to another. I mean, LYDIA will be international next year, and we don't have an option not to do it.
Yeah, and Ollie, your bank supports Euro, hopefully?
Soon. So our partnership approach means that we don't need a banking license. We operate on top of a bank. So we see ourselves more of a tech company than a finance company. So every tech company goes global. We don't see why fintech hasn't done that to date. We think there's a big opportunity for fintech companies to create more of a brand rather than a financial product, which is what we're trying to do. So I think there has been in finance companies and fintech, they focused on one market, and in the UK you go to America. That's the rule. You start in the UK, go big, go to America. But I think the way we're positioned is global should work in a much better way because we're a much leaner company than a traditional finance company. And I think that's a way that needs to be explored for fintech, definitely.
I think so one learning if you go abroad is like we also did, just standard box and then one product, and then step by step, because to understand your market very well. I think one part of the internationalization what we didn't touch here was I was I think 2 months ago at the Investech in London, where a lady of the FCA spoke, and I was amazed because I think one thing is very clear. So the openness and support of regulators and also the city, but I think there's a positive openness also here, makes it. I mean, this lady started talking. We are here to push innovation for clients. That was her first line. I was like, whoa, a regulator. But that means there was a person from UK Invest and Trade. He lives in Düsseldorf, and his only job is to try to get startups from Germany into UK, and regulation and support from, they have separate teams just to push fintechs further. So I think living in Germany, I see that UK is doing an absolute better job in framework and support there. So internationalization can also come, if you talk to some fintechs, because they see the framework is just more supportive for them in UK than in continental Europe. That's an experience we had, and we have spoken to some startups that really moved to UK therefore.
Yeah, well, it's interesting that regulation can be a barrier, but it can also, which can be a good or a bad thing. So if you're inside, it's a good thing. I would argue that for number 26 to grow in the German market, probably it was a much harder job to do at the beginning. I'm in the advisory board there, so I know. But it's going to be probably more difficult, maybe, for a UK company to get into the German market because of all these barriers we just spoke about. Yeah. Let's move into, I think we're running a bit out of time, but I think there's one topic to wrap it up. How will the banking and fintech landscape look like in 3 years? And let's not completely forget about insurance. I know this is a very much banking-focused conference, but we actually, as Speedinvest, we also look a lot into insurtech models, which are highly fascinating as well. There is no reason in principle why big data like credit tech does it shouldn't work to also underwrite risk and insurance risk in principle, I think. But probably that's a whole separate panel maybe for next year. How will the landscape look in 3 years? Will the fintechs become banks? Or will that collaboration improve? Where will it go?
If I can start, I think there will be some which will become banks. Some will be required to get the same level of banking license because they want to go into deposits. So we see quite a lot of that in the UK, which are the new coming banks and which managed to get finally licensed after many years of not getting new banking licenses in the UK.
So how many new licenses are there now? 4 or 5?
I think there will 4 were granted, and there are a couple of more applications, and there will be some more news this and next week. So some will compete directly with banks. I would assume, nobody knows what's going to happen, but I would assume there will be a lot of collaboration between banks and startups. I'm hoping the banks really will step on both feet to welcome innovation and welcome the, as you called it, the cheap way of getting new products and services and the user interface out into their client portfolio. We hope to see a lot of more collaboration, what we just saw from Smava in terms of banking being a channel for innovative startups and selling quite a few of the startup products to their customer portfolio, even when they cannot serve, and they will be able to serve thanks to the startups. And I think there is a lot of verticals which have not been touched by innovation, and there's a huge opportunity in fintech, what we will see. So I'm really optimistic about getting great new products and services and a lot of new collaboration, but also new competition.
Anyone else?
I can certainly speak for the point of sale side. From the merchant side, I believe in the greater scheme of things, what we see is that there are smaller and smaller teams that are focusing on various or on very specific verticals, building solutions that really matter to the merchant. And payment is one of the parts that a merchant requires, but there's loyalty, there is how do I get a customer into my store in the first place. There's many problems a merchant has, and there will be companies for every merchant vertical that specifically target that vertical, and those verticals get smaller and smaller as the cost for building a startup get lower. So that's what I see, that there are more and more speedboats out there that are highly focused and that are really targeting a very specific vertical in a country, in a given country, in a specific merchant segment, and just build solutions that really help the merchant grow, and not only putting a payment terminal on the counter. And banks need to be in those speedboats, and they need to be partnering with those companies and really appreciate the level of innovation that they're getting from them.
I think in the last 6 months or a year that we've been around, we've seen a massive increase in how open banks are to collaborate. I remember when we started out, we went to see a big bank in the UK, and they said, you're never going to launch, we don't want you to launch, we're going to make sure you don't launch. Pretty much straight out. And now we're partnering with them. And it's insane to see how they've just flipped, because they know that people like TransferWise is a great example that you can't really ignore them, because we can do stuff quite cheaply, quite fast, and if we can get users on side, then we're unavoidable. So I would say collaboration's much more open, but at the same time, there's nobody in the UK really underestimates the banks. We know that they're more well-funded than us, they've got great teams, they can hire the best people, and they've already got users. So we all know in fintech that banks still have the advantage, even though we are much cheaper, much smaller. So collaboration works on both sides.
Well, I strongly believe that the collaboration will either work fine within 3 years, and bank will do some acquisition and they will start partnering actively with a lot of fintechs to get more agile, to get more adapted to what new customer wants, to the youngest customer wants. Otherwise, they're going to be in a really big trouble, not coming from the fintech, but coming from the GAFA, from the Google, from the Amazon, from the Facebook. And these are people that you can't compete with if you're not very agile, because what banks have been doing with fintech in the past, well, basically they've been looking at what's happening when some go big, they just buy them. Honestly, for a bank, cutting a check of $1 billion is nothing. BNP Paribas just pay a $9 billion fine to the US. Well, they didn't even care, honestly. So cutting a $1 billion check to improve the business, you can imagine that's easy. The problem that you can't buy GAFA, you can't buy Google, you can't buy Facebook, you can't buy Apple. And honestly, if you ask the people in the street, especially for the millennials, in which company do they have the most trust? Do they trust Apple or do they trust their bank better? And even if you look at that from a pure financial balance sheet perspective, well, you have to trust Apple better because they got more money at the bank. They got $200 billion in cash at the bank. None of the existing banks have that kind of money available. So there is a big problem, a problem of number of customers. This guy counts in billions when banks count in dozens of millions. There's a problem of brand, there's a problem of digital interface, and there's a problem of trust. So if you add all this, banks better move fast and integrate fintechs, whether by acquisition or by partnership, into their own corporate culture, or they're going to be disrupted big time, if not destruct for some of them by the GAFAs. And when I say GAFA, I also want to put in that group the big company from China that we too often forget about, because they're already huge. I mean, Alipay, for example, is already bigger than PayPal.
Yeah, how does the banking landscape look in 3 years? If it's 3 years with low interest rates, that will be very interesting to see. I think what we can learn is a lot from the retail. There's not retail banking, but retail like Amazon and other shops do it. I mean, I think what we see with Smava, but also other players, the platforms are growing heavily because we all, as users, are used to now compare, find solutions for everything, comparison websites. So I think the platforms will get more and more important. We see that in all segments. I think if you can't offer what you're used on your WhatsApp as a bank or in these kind of interfaces or user experiences, we have an issue as bank. I think the value of data will increase heavily. And I think there as banks we have an advantage. We also have the trust on our data and we should make sure we keep that. I think that's an advantage we have. And we should really use it properly and never lose that trust. Comes by foot, goes by horse, so it's a long process. And I think, so in the fintech space, I expect absolute consolidation. Naivety it already improved in the last 2 years. I think the naivety in business models, it really got a lot better. People really understand regulation, discuss about it. So that will even go more out. So you will see more professional parties, probably more consolidated because some won't make enough revenue just to keep on going. So I think it's exciting times ahead of us. We all have to move. We have to find new models and learn. And I think the fintechs are just the best ones to touch the borders and see how far you could go. We as banks, we don't dare to. We're not the entrepreneurs, and we should not go there. I think that's the job of good entrepreneurs. And so I look to a great collaboration, and I think I expect that the full financing kind of in the banks will look like that.
Okay, thank you very much, gentlemen. Should we open to some Q&A? I'm looking at the organizer. 3 minutes, oh my God. 3, okay. Please. Mic to this gentleman over there.
My question is about the collaborative model. Now, there are a lot of banks who actually outsource their work for technology solutions to various vendors. Like, for example, there is a lot of outsourcing going on in Eastern Europe and even in Asia. Don't you think there is a strong competition that fintechs will face from these vendors because they're already providing really high quality solutions? Like, for example, in India, I'm talking about Infosys or other IT service solutions. So fintechs will face a strong competition, don't you think, in terms of these vendors?
But are there specific examples you can cite where a bank has stopped working with a fintech but has used Infosys to build it? Or?
No, I'm not saying they've stopped, but then there is going to be a strong competition. Like, why should I come to a fintech when I'm actually outsourcing my work to a high quality vendor in India, or for that matter in Hong Kong or anywhere in Asia for that matter?
Okay, so I don't know, Ollie, are you concerned that?
So can I just quickly answer? We're not talking about outsourcing IT. We are talking about businesses, collaboration of two businesses. So there is a business and there is a business, and they need to learn from each other how to work together. It's not a vendor relationship, it's a partnership. That's a big difference.
Okay, thanks.
Yeah, I think on that, there's a lot to be said about the brand that fintechs are building. You can see that with people like Zopa and TransferWise. People go to them now over anyone else because of the service they give and what to expect. If it's just a repackaged app from a vendor that's branded RBS or branded HSBC, it's still got that brand attached to it, which some markets don't associate with. Millennials don't like their banks at all. I think 17% would recommend their bank of millennials, which means 83% won't. So I think that there's a big market for collaboration there, because if a bank wants to reach the 83% that wouldn't recommend them, they need to partner with a fintech rather than rebrand their own app.
Questions? Wow. The room has filled up quite nicely. It's probably because of the next speaker. Who's the next speaker? No more questions, Dr. Pencil? Jörg, come on. No?
I'm sure it's not for the next speaker. The next group is also a good group, but this was an excellent group as well. So you would have deserved more discussion.
I was fishing for that compliment, yes.
So
yes, yes.
Now you have it.
Okay, so that's it?
That's it.
Great.
Thank you very much.